Hi, this is Zach from Zach's Traders Cafe with a look at the major markets on Wednesday, the 8th of June. Starting off with the FTSE 100, and a bit disappointing, really, given the way that yesterday there was no end-of-day close above 6,300. Other markets were actually rather stronger, especially the DAX, but we're still looking for that end-of-day close above 6,300 to target the top of this rising January trend channel at 67.50. On the bear side, break back below the floor of the channel, let's say 6,200, would be the sell signal on a potential return to 60.50. But at the moment, with the RSI at 58, it is the upside that we are still facing for the FTSE 100. Onto the DAX, and situation here is that we're looking at fresh gap to the upside after the gap through the 200-day moving average last month, and then the gap fill in the wake of the shock non-farm payrolls for May. What we need to see here really is an end-of-day close above 10,300, which is this resistance line from November, to target up to the 10,500 zone. This stage only really back below the 50-day moving average at 10,030 would question the breakout and break up scenario. RSI bounced off 50, so that's another leading indicator on the upside for the German index. Onto the Dow, and stuttered a bit after breaking that red resistance line from April. Probably not more than really people having doubts about the 18,000 level, which was just broken briefly during yesterday's session. Remains the same really here, that any dips towards the 50-day moving average at 17,772 regarded as buying opportunities as we chase a target as high as 19,000. Onto the S&P, and here again just disappointed towards the end of the session, but still up. The view here is that at least while we're above the 10-day moving average at 2097, one should be looking for further significant gains towards 2200, and only back below the floor of this rising January trend channel at 2073 delays the upside scenario. For the tech stocks, US tech stocks, the Nasdaq, slightly disappointing. Looks as though this market wants to head back towards the initial June support area below 4,500, probably back towards 4,480. That's the end of day close stop loss as we chase a break higher towards 4,600 initially, and then as high as 4,800 at the top of this February price channel. Only back below 44.46, the 50-day line would be outright bearish for this market at the moment. Moving along to the currencies, and the sterling still holding well above the 50-day moving average at 144.25. That suggests that we're heading back towards 147 plus, which is the area of the 200-day moving average at 147.28. On the downside, 143.50 is the Brexit support line, i.e. below that, then we would be heading towards that. Above it, we're not. So at the moment, looks like the markets have decided, are still of the view that we are heading for a Remain outcome. On to euro dollar, and here you can see that we've got this bull flag above the 50-day moving average, 113.15, while we hold above that on an end-of-day close basis. This looks like a mid-move consolidation, and we should head towards a retest of May's 116 peak. Finishing off on the currencies with dollar yen, and here we got further weakness, really, sort of not incredible weakness, but still continuing the move down from Friday. That little peak there towards 107.90 should be eyed up, in the sense that while we're below that, there's the risk of 105.55, which was the May floor. The gold, which is still looking strong after the Friday jobs outcome, 12.48, the 50-day moving average, and we're just crossing that at the moment. And at least while we're above the 20-day moving average at 12.40, one would be looking for a full retest of the May resistance just above $1,300. RSI at 53 is also a leading indicator on further upside as well. Only back below the 10-day moving average at $1,225, currently regarded as outright negative for gold over the next few sessions. That's it from me. More at the same time tomorrow.